Hello guys, welcome back to my channel. This is Matrixfx, and like I promised in the video before this one, in the weekly review video, I said I was going to break down the week. That's had it been where to trade the week with my simplified ICT strategy, how it would have been for you this previous week. So I'm going to make it into different videos for I think different pairs. So that's that. So let's jump into the chat. But before we go, guys, if you're enjoying the content so far, please do well to subscribe to my channel and leave a like on the video. So let's go straight in. So for this particular video, I will be going with gold. I think gold will start it. So let's be quick with it. Now we're on the weekly time frame. So we're on the weekly time frame. Now on the weekly, I think you'll be working with price as price goes. So but overall, this should be like your this fair value gap. You know that market will want to trade into it, but you can see that it doesn't really refine how or like areas, should I say, levels where to stop, things like that. So let's go to the daily. Now in the daily, clearly you can see, I think this was like the previous week. This was the previous week. Okay, sorry. This was the, excuse me. Yeah, so this is Monday. This was where the previous week closed. So you can clearly see that this is the fair value gap we are trying to fill. This fair value gap right here is the one we are trying to fill, and the previous week closed just above it. Just tell you that when the week open, we'll be filling this and continuing higher. I think at least that's what I would think, because if you watch the first video, you know that we are bearish on dollar, so automatically we are bullish on gold too. So I think that's all for this time frame. The next time frame, 1 hour. Now I want you guys to notice my transitioning of time frame, because I won't be really doing a separate video for that. So you just notice the way I used to go from my higher time frame to my lower time frame. I have a specific way of doing it. I go from the weekly, daily, 1 hour, 15 minutes, then my 5 minutes is for entry. So but if the entry is not to that, like it's not too clear in the 5 minutes, that's when I can now go to like the 3 minutes and the 1 minute and so on. So this is the week open, the week close, and you can see the week has not yet closed. Price is still trading. Now I think I will also tell you guys about the swing model I'm working on. The problem I'm having with the swing model currently is news factor. Sometimes when I'm testing it, I'll notice that it might be in profit before you know the news might just come and take our stop loss, and that's all. That's that. We can't really do anything about that. We can't blame the market for taking our stop loss. We just have to move on. So I think on the hourly, we notice that the market has filled the fair value gap. Let's assume that we're just coming on a Monday. You know that you don't have much data to work with on the hourly, except from like market to take out this low right here. So we go to the 15 minutes. So if I'm coming to the chart, I think I'll be coming when this rectangle here has already formed, which is the Asian range. So in my time zone, we cannot trade the Asian session because we'll be asleep then, and I think I'm supposed to be asleep now, but I'm just recording this video. Maybe I might post it early or not, depending on how fast I edit the video. I think real life is I'm still handling with issues from real life that I can't really suspend. So that's that. I think, yeah. So we go to the 5 minutes. So we already know where we are in the trade, in the market, sorry. We already know where we are. Now we know that we want to be bullish. The market has tapped into the fair value gap. Look at what the market did after it went down. You know that we can't take anything here. We have to wait for the market to grab liquidity. So after the market went into that fair value gap. Look at what the market did here. Created this low. Created this low right here. Then look at this swing high right here. Look at this swing high. It broke this swing high. So you can see I didn't use this because this is a weak break. So I use the body breaks. That's what I use. I think I have to remove this. You guys already know that we are in the fair value gap. So down, up, then after breaking that, these are fair value gap. We just fib the leg that broke structure. As usual, fib the leg that broke structure. You can see these are 50%. I can't really remember why I used. It's a mistake. I think let's go to the lower time frame. I think that was a mistake from when I was hurrying to prepare the video, but obviously we'll be looking for something below the 50%. We'll look for something below the 50%. We have this fair value gap right here. So this will be our entry. Oh, this will be our entry. Our stop loss. That you guys already know where the entry is. Our stop loss and our 1:3 targets. Okay. 1:3. I think 1:311 is okay. And you can see now in the initial one when I was reviewing it, I noticed that I was like, okay, we didn't get profit from that. The market just came to swept this, and I was like, I wanted to use the opportunity to teach you the trade management. So the trade management I'm using, since it is ICT strategy, I'm using ICT trade management. Now what he said in the video was that you take your range, the range that you are like you want to run in profit. That is your targeted range. Now after taking the range, you fib that range. Now he said when the market gets to 25%, you can take something off depending on the kind of trader you are. But I don't really like taking things off. Like I don't really like taking closing partials, except the market has run. Like let me know that okay, as I'm taking partials, I won't be babysitting my chart again. So if I want to take partials, I always allow the market to get to at least 50%. But ICT says that at 25% fib level, you can simply start reducing the risk. That's you can start drawing your stop loss up. You can start bringing it up. Let's say it taps here. I think 25% will be somewhere around here. As the market gets to this point, with this huge candle right here, it have maybe reduced your risk to this level. If it gets to 50%, you can also reduce it. Now ICT says that when it gets to 75% fib level, that's when you can break even. That's when you can break even. When you get to 75% fib level. But normally before it gets to 75%, I might have, depending on the time of day, I might have left the trade entirely. I might have closed my position, or I might maybe break even or something, depending on the condition. I can't really say that this is how I do it, this is how I do it, this is how I do it. So day one you'd have gotten a good trade. Depending on the kind of trader you are, you'd have caught the sell too. Depending on the kind of trader you are, depending on how good you are with the concepts, you'd have caught the sell. You have noticed that the market swept this. Okay, what's the market doing now? The market came back down. Is this a swing point? For me, no, it is not. Okay, the market came back high, it broke this. Now this is an obvious swing point. This is an obvious swing point. The market didn't come back up to 50%. I think we can see that here. The market didn't come back up to 50%. If you're an SMC trader, SMC traders, we know now, we would have just been looking at this other block right here to take this trade lower. So I'm keeping our take this trade lower. So you'd have seen that that would have been a good trade. Now nobody said that you can't have more than one trading strategy. Obviously I don't have only one. I think I still do trade the SMC pattern, and I still use the ICT 2022 mentorship pattern. Nobody said you have to have only one pattern. You can have as much as you want depending on you. So if you can manage yourself during that, if you can allow your mentality not to cluster with all the strategies and everything. So I think that's that for day one. So probably during the New York session you didn't get anything, the PM session nothing. And there's one thing you guys need to know: price is very fractal, guys. As you are coming into the chart and seeing one thing, you need to be aware of where you are in the market. Now we notice the sell. Let's say we come the next day, come to the market the next day, the market is still here trading. We notice the sell. We notice that we took out some kind of liquidity right here. Let me just go the 50 minutes. Now for somebody who wants to catch the swing, let's say you want to catch this kind of swing move, so for somebody who wants to do that, you have to be flexible with time frames. So let me just quickly get that here. So we broke structure today down. Obviously you can see what's going on here. Broke structure to the up. We start looking for our fair value gap. We flip the leg. I start looking for our fair value gap below our 50%. And what do we get? Just below it, we have this fair value gap formed in Asian session. I think it will be very clear in the, yeah. So you can see it formed during the Asian session. So I just highlighted that, took it, like just put my trade 2 there and stop loss below the low. So you can see the market tapped into it, went higher, went low, came back up. It was doing like the Asian session for the next day. I'm just breaking down the swing trade here. So when the market came back higher, this particular day there was news. And you can see when the market traded lower, the news manipulation occurred and took our stop loss and started going back up. So that will be like a losing trade for somebody who wants to take it in a swing manner, but we're not taking it in a swing manner. We're taking it in a swing manner for now. We are still taking it as like an intraday something. So obviously the market, we are here. So the market trades, takes out this previous day structure, that is this New York structure, this previous day New York high. Market takes it out. You can see let me go back to my 5 minutes. Yeah, so after taking that, you can see the market traded, but it did not give us a setup. So there are times like that where the market will go your direction and everything, but it won't give you an entry, it won't give you a setup to enter from. So you don't have to be wild and just go into the market and take the trade. Sometimes it might be in your favor, but sometimes it will whoop you very hard. So I think as traders, the thing that qualifies us as profitable traders is to be able to like put ourselves in a winning situation at all times. That is, you should be putting yourself in the best possible situation to win. So that's what you need to be doing. Just be putting yourself at the best possible. That's why you see I use the 5 minutes for entry. I like seeing my entries in the 5 minutes because it gives me more confidence that the lower time frame 4, 3, 2, 1 are obeying that 5 minutes. So they are complying to it. They are conforming to that 5 minutes. So it will give me like more confidence. Now another thing, I can't take a trade that has passed the first leg. Let's say this is the first leg. The market trades back in below the 50%. This is the second leg. After the second leg right here, I can't take any other one. If it forms during the third leg, I won't take it. So that's that. I won't take the third leg because most times the third leg might not even go that far. It might not even get to my 1:3, and I believe it will be very, very, very close to the objective. So to be very close to the objective or the target, so there's no need taking it. Now that day went and it closes, and you can notice on a Tuesday we didn't have any trade. Now guys, you don't have to be trading every day to be profitable. No, you don't have to be trading every day. I think 2 times a week is something. You don't have to be taking trades every day to show that you're a profitable trader. No, 2 times a week is not bad. I think ICT said that the industry standard is like 15%, and 2 times a week in four different pairs, that would be like 8 trades. I think that will give you like 15%, and you don't even have to trade again that month. So although we all know that we are humans, we are greedy, we'll come back to the market either ways. So let's continue, guys. So the next day the market trades and takes out the high. It didn't give us anything. I'll be using the 5 minutes to continue from here, just to review, just for the video not to be too long. So it didn't give us any setup, it came back down. Now remember that our overall bias is bullish. So this particular trade, the trade we got on a Monday, would have been 1%, okay, taking a 1-3. And depending on how you manage your trade, for some people they will believe that maybe the low formed on that Monday and they would have held that trade and it would have been a break even for them, depending on the kind of trader you are. But for somebody like me, I think I have said it so many times, that I always take something off at least 80% of the position at 1:3 RR. So I think I have my reasons for doing that. It helps my mentality. So I can let the remaining run. If it hits break even, I don't even give a fuck about that. I think 20% is something that when it hits break even, it's just giving me back my money. I've already bagged my profit there. So now to continue, the previous day, you notice that I think this is Wednesday, F1C came out that day. So normally you don't even need to be you don't even have to be looking at the market during F1C. You can see what the market is doing. The market wants to continue bullish. Then this manipulation right here, if you have all those breakout traders that be trading like the, what do you call it, the London break, I've forgotten what they do call it, but when I was still doing my intro to Forex, I learned one strategy like that, the breakout, this and where you just put a trade here and put a trade here, whichever one picks the first, you close the other one and write the profit and stuff like that. I got my ass whooped there, guys. I got my ass. You don't ever try that. It's too risky. So as you can see, the manipulation occurred before the market continue higher. So now when the market wanted to continue higher, after sweeping all this liquidity, it's very obvious that we have grabbed liquidity for this day. So we're waiting for this swing to be broken. Now remember what I taught in the field technique. It didn't break the swing immediately. Started giving one kind of move. This is our new leg. Now we don't care about this level again. This is our new leg. Now immediately it broke the new leg. What we need to do is to feed the new leg. As you can see, we got this fair value gap on this right here as the previous high. We can just ride it from that level. Now somebody was saying that I was dubbing something, or I formed the field technique. No, ICT taught it in his 2022 in his core content. He didn't teach it in his 2022 mentorship, but it was in his core content, and that's where I adapted it from. So for those of you saying that maybe I formed it or that, it's all from ICT. I'm not taking any credit here. It's all from ICT. So let's continue. So we would have taken a trade from here. And the reason I highlighted this fair value gap right here is not for us to take a trade from it. It's because whenever there's a fair value gap below your entry, you need to be cautious about that fair value gap, because they say the market is efficient. The market might just come back and fill the fair value gap to continue. The market might just come and do something like this, feed this fair value gap and continue. Now, if your stop loss was here, it would have taken you out. It would have induced people to maybe take trades, but this time around, maybe that's what it didn't do that this time around, but who knows? We never know what the market makers are doing, so we just have to put ourselves in. We have to put ourselves in the best position to win, guys. So you target your 1:3, and eventually we hit TP at, I think, the next day. But for somebody like me, to be sincere, once the day closes, if those of you who watch my simplified series, you already know that I do close my trades before the end of the day. And I think 1:8 to me is not bad. Profit is always preferable than losses. So down for me to take a loss, I'll take 1:8 or a 2, or even a 1:1 win. I will take that over a losing trade. But I think that brings us to today. I think, was it today or yesterday? So you can see that the market didn't really do anything. There wasn't like any real direction. Now, in order for you to decipher this kind of market, that the market doesn't want to do anything, this is what the market did here. Broke structure, came back, filled that, right? Now, where's our fib? Take our fib. sorry, I didn't even see this. We didn't really, this is like a sweep of liquidity. Now, some of you might ask the difference between a break of structure and a sweep of liquidity. Now, for me, my sweep of liquidity is done with wicks. When I see wick do it, that's when I'll be like, okay, that is a sweep. My break of structure is done with the body. So if you understand, when it passes the specific level with the body, that is, it closes with the body above that level, it simply is a break of structure for me. And it can also be a sweep of liquidity. Now, depending on my bias. Now, in this case, this is a break of structure because we are bullish. This is now a sweep of liquidity. Depending on how good you are, you'd have noticed that after sweeping that liquidity, it broke the structure again. This is your fair value gap below your 50%. You can take that, but you know that your profits won't be going anywhere. And you don't know that till the end of the day. Probably you might even be in a loss till the end of the day. And so you can see. But overall, that's like my general motto. If it is done with a wick, I barely see it as break of structure. I mostly see it as sweep of liquidity. But when it's now done with the body, depending on my bias, I can now say this is a break of structure or this is a sweep of liquidity. Stuff like that, guys. So you can see the market didn't really do anything this particular day. So I think that will be all for this video. I will do the next one with another pair. So you guys should stay tuned. And if you are enjoying the video and the content, please do well to like and subscribe. I think that's all, guys. See you later.